Hey, Bobby Traves! I want to do a video analysis update on QSI, Bitcoin, Renovaro, Supermicro Computer, and Tesla, really focusing on this new Tesla ETF that I bought today, TSYY. So we've got a lot to get into. Let's get right into it. Bang! I'm not talking about LeBron James or Seth Curry. I heard they had a fun night last night and they had some bangs come out, but this is really a bang. I made a video about this just a few days ago, and I really can't take too much credit for it. I gotta thank the robots. Domo Orogato. This screen is got it, you know? So this is a pretty awesome screen. This is where I got a really big winner today, and I took a small bit of profit on this. But this screen, this long call screen that I showed you guys, and this is the benefit of following this channel, that I'm just sharing this for free. And let's look at this right now. Supermicro Computer is on it. Canaan Creative is on it. GameStop is on it. So smash the like button if you want to see me do an analysis of those stocks. But this was really the star of the show today. Quantum Sci Inc. It was on the screen. I made a video about it. Wave 1, ABC Wave 2, and then from this low, 1, 2, 3, 4, 5, Wave 1, ABC Wave 2, and then boom, Wave 3 of Wave 3 half begun. The length of Wave 1 placed at the Wave 2 low says that this is going to be in the $3 range pretty soon. That's found by taking the 127.2% extension of the length of Wave 1, placing it at the Wave 2 low. So way up there is going to be that 3 target. So after that, there's expected to be a shallow Wave 4 and a Wave 5 higher. If Wave 4 retests the Wave 1 high and Wave 5 is the length of Wave 1, placed at the Wave 4 low, QSI can go all the way up to $4. And that would just end this black Wave 3 before Wave 4 consolidation and Wave 5 higher. So I'm looking for QSI to be in the $3 to $4 range. It's looking really good, and it's really more of a proof of a system that's been, being studied. Plug Power is another one. We're going to see if it can pull off a miracle in clean energy. Of course, you guys know I smoked D-Wave Quantum. And so this sector had a lot of momentum coming into this new quarter. The clean energy sector, unfortunately, not so much. It's really just being led by Tesla right now and First Solar a little bit. But 1, 2, 1, 2, Wave 3 of Wave 3 in progress. And this is just beautiful. Thank you guys so much for liking my videos. Thank you for subscribing to my page. We have done so much this year. I really can't even put it into words how much we have accomplished as a page. And I'm not just talking about Palantir and Tesla and D-Wave Quantum and Coinbase and Joby Aviation, and shout out to the coolest follower ever, Archer Aviation. Shout out to the amazing traders who called a super cycle low in the railroads. Do you know how proud I am? Oh man, I want to go back to school and tell my finance professor, my followers showed me the super cycle low in the railroads at the perfect time. I think that's my proudest moment, to be honest. But the Archer Aviation bull is right up there. That was an amazing call. Wave 1, 2, 1, 2, Wave 3 of Wave 3 in progress. QSI heading to the $3 to $4 range. I shared an amazing screen for free. I said I was stupid for doing that, but I'm really happy I did that now. I'm really happy that we got to see this play out with a trade that I took. This stock was on the screen today. It's down pretty handsomely, and it's up a little in after hours. This is Renovaro. So this was on the same long call screen. The one strike call was on it. I do not have a position in this stock. But we're just $0 in annual sales. So this is one of the biotechs. But let's look at this. Renovaro includes Renovaro Cube and Renovaro Biosciences. Renovaro Bioscience is an advanced cell gene immunotherapy company. Its lead candidate product is a therapeutic vaccine targeting cancers which are difficult to treat, including pancreatic and potentially HNC, triple negative breast cancer, and advanced liver cancer. So you guys don't need to know much about me. Look at this: 71% institutional shareholders, 21% insider shareholders. Nasty, nasty interest coverage ratio, $0 in annual sales. This has to be one of those breakthrough. They're gonna have to announce something pretty soon. But over 90% of the float is either an institutional shareholder or an insider shareholder. I think that's very interesting. But what I was trying to say is you guys don't need to know much about me to know I don't know about liver cancer. I don't know about pancreatic cancer. I don't know about triple negative breast cancer. I don't know what that is. But hopefully this company cures all three of those. So let's look at Renovar. I think we're going to be on the daily chart right now. RENB. We'll make sure we've got this right. Yep, here we are. Renovar, wave 1, wave 2, another wave 1, ABC wave 2. And it was on this, dare I say, this magic screen. I've made money from Canaan Creative. Now I've made money from QSI. Will I make money from Plug Power? Remains to be seen. But this stock was on this screen. It looks like another setup. Wave 1, wave 2, another wave 1, ABC wave 2 for RENB. I'm looking for wave 3 of wave 3, and I'm looking for 67 cents to hold. So very volatile. But looking at these time fibs, I'm also looking for a turnaround around the new year, January 6th of 2025. So great news, hopefully, for people with breast cancer, pancreatic cancer, liver cancer. Hopefully, this stock is going to do very, very well. About 90% of the float is what can be referred to as smart money. Smart money. Speaking of smart money and this long call screen, Supermicro has a very interesting ETF called SMCY. Now, the reason that ETF is so interesting is because Supermicro is a very volatile sucker. And when this thing is going to the upside, the ETF did not exist. But this stock has had 219% implied volatility. The lowest implied volatility Supermicro has had is 60%. That means if this thing gets into an uptrend, SMCY is going to pay massive, massive dividends for SMCI bulls. So this is a really cool opportunity to blend Supermicro with SMCY for the Super Bulls, which appears to be this long call screen. So this long call screen, if someone forced me to take a position in Supermicro I'd probably be blending about 30% Supermicro with the SMCY ETF to collect those out of the money synthetic covered calls from YieldMax. Speaking of YieldMax, they've got a big competitor, which we're going to get into. Let's look at Supermicro Elliott wave. The wave 1 starts way, way, way over here. It starts a long ways away. But what's important is that this is the clear 1, 2, 3, 4, 5 waves impulse. Wave 1, A, B, C. Wave 2, bar chart doesn't let me label A, B, C anymore while I'm live. So that's a little unfortunate. But what is fortunate is that bar chart has stepped up in other ways. What I've done is I've taken the retracements of what I believe is a small wave 1 and a small wave 2. So that's a 48 to 17.75. The 61.8% retracement is 29. Right now, that's really the most useful level to the downside. What's the problem with using that level to the downside? It's the 61.8% retracement, which is a great place for wave 2 to end. So it's kind of like setting the stop loss at the optimal entry. So the real invalidation is going to be 23.83. That's a little wide. So now there are a few ways for if someone forced me to take a position in this and I had infinite funds, I might do something called the Monte Carlo strategy where I take a small position, and then if Super Microcomputer falls, I can double the position or I can start adding to a bigger position in this range. The other cool thing is this ETF has a covered call ETF. So what I can do is I could buy SMCY, and then once I know that I'm right, I can start adding the commons while SMCI starts to run away. So this is wave 1, ABC wave 2. 29 is the most useful level right now, but 23.83 is the big invalidation. What's kind of the Elliott wave looks nice, but it's on this long call screen, and we'll see. We'll see if this ends up being a magic screen. My money is not where my mouth is right now. With Super Microcomputer, I am long NVDY. And my money is where my mouth is with QSI, Bitcoin, and Tesla. Speaking of Bitcoin, another winner, just like QSI. I mean, this is an amazing feat. 1, 2, 3, 4, 5. That was just so beautiful. How many times did I point out this gorgeous 1, 2, 3, 4, 5 waves impulse and ABC correction? This was years in the making, but it did happen. We saw 108,000 be reached. ABC wave 2, and then from this low, wave 1, ABC wave 2, wave 3 of wave 3 was reached, and voila, we perfectly reached the 100% extension. Isn't that amazing? Now let's talk about what happened after we reached the 100% extension. On this long-term chart, we're going to see something pretty interesting. I believe we're going to be looking at the 2-hour chart. I'm getting pretty good at the 4-hour recently. The 4-hour charts I'm getting good at recently. We'll see if that lasts. But we look at Bitcoin right now. Remember, I can't label the ABC corrections. That was bar charts. Only mistake. They've made up for that in a big way. So I won't be too hard on them. A, B, C correction. And then from this low, wave 1, wave 2. And then look at this right here. Try to count this with me. See if I'm just pulling this out of nowhere. 1, 2, 3, 4, 5 waves up. Wave 1, wave 2. It looks like this is 1, 2, 3, 4, 5 waves. Wave 1, wave 2. I know it's a small time frame, but 1, 2, wave 3 of wave 3 is in progress. And right now there's a glorious downside level, 92,258. I know that's tight. That's really tight before this next leg higher. This is kind of a bang bang. It's going to hit really quickly, or it's going to be invalidated really quickly. Sometimes that's a good thing. Sometimes that's a bad thing. It really only matters if the stop loss is honored, which is important. It's also really important, obviously, to understand Bitcoin is a winner. There are ways to manage winners. Smash the like button. Make sure to subscribe. We can talk about ways I manage winners like QSI and Bitcoin in a different video. Maybe I'll make a whole video dedicated to managing winners. But this is wave 1 and wave 2 from this low. This is another wave 1 and another wave 2 above 92,258. I'm looking for wave 3 of wave 3 to begin. And I'll share a conspiracy theory with you. I have a small conspiracy theory that they're keeping Bitcoin down and these altcoins down so that 2025 can get started with a bang. It's going to have a beautiful candle in January. That's my little conspiracy theory right there. There's going to be a wave 3 higher. And then the perfect wave 3 target is the 127.2% extension of the length of wave 1, placed at the wave 2 low. It would look something like this for Bitcoin. It could be up at 104,595 before a shallow wave 4 and a wave 5 higher. So that's the Bitcoin. My most recent video is about 6 other altcoins. Go watch that. I know most of you already have. Thank you so much for doing that. Let's talk about a new position I took today. I've already owned TSLY for a long time. I've owned TSLY for a long time. I actually bought TSLY right here. And so I've collected dividends from TSLY. Now, ever since Tesla has exploded, I started to add to that position in a few ways. What I'm doing was pretty similar to Coinbase, because what happened was bullying worked. I bullied YieldMax, and I said, hey, YieldMax, TSLY is losing to TSLP by a big margin. And ever since I said that, I know you guys are going to think I'm nuts, But now TSLY is pacing step for step with TSLP's total returns. Isn't that interesting? We're having a big impact, guys. I'm telling y'all, we're having a big impact. From this low, wave 1, wave 2, and then from this low, 1, 2, 3, 4, 5, wave 3. I predicted wave 4, and then I predicted the end of wave 4. Bang. Now I'm looking for a wave 5 up into the 540s. But what I really want to focus on, and I made a video about Tesla recently. Go watch that one again if you need to. This new ETF. I'm literally writing a book right now. I'm literally writing a book right now about how YieldMax started an arms race. And there's been a lot of companies, XDTE, RDTE, and QDTE, ProShares with YETH and YBTC that are competing with YieldMax, BlackRock, IWMW, and IVVW. They are trying to compete with YieldMax. This looks like the very first one that might actually be beating YieldMax. Granite Shares isn't playing around. They're doing something extremely interesting. They're selling cash secured puts on leveraged ETFs. So I know people hear leveraged ETFs and they hear selling options and they go, this guy's crazy. You know, I'm not going to tell you I'm not crazy. But what I will tell you is that because this is all being done through an ETF, there's no assignment risk. There's no margin. There's no margin fee. There's no margin call. That's a lot of no, and there are good things to say no to. What this is saying yes to is premium, lots and lots of option premium. This ETF is very similar to, I want to make sure I got these right, IWMY and QQQY. So what those ETFs do is they sell cash secured puts on the NASDAQ 100 and the Russell 2000. What this ETF does is very similar to those ETFs, but what it does is it's going to sell up to 5% in the money to 5% out of the money put options, not on Tesla, but on TSLR. Here's why that is amazing. Look at TSLR's implied volatility. It's 150% right now, 149. It's been as high as 175%. What's that mean? That means over time, I'm expecting the yield on this ETF, if I've got this right, is going to be well over 100%, even kind of in less volatile times. So TSLY is a way that I can get exposure to out-of-the-money synthetic covered calls. CRSH is a synthetic put ETF. It's collecting short out-of-the-money put premium. So that's acting as the downside buffer for my portfolio. What I'm doing, I'm buying 30% TSLY, which is already a position I've been taking. I took a lump sum position in TSLY. So the position is 30% TSLY. It's 30% TSYY, which is this new ETF. And what's the cool thing about that is that both of those ETFs are mostly long Tesla, but every time they sell an option, they're going to lower the delta and collect a lot of premium. So they're not fully long Tesla, but they are, all else being equal, going to benefit from Tesla rallying. They're also, all else being equal, going to benefit from spikes in implied volatility. So the position is 30% TSLY, it's 30% TSLR, and it's 40% CRSH. The idea is that these combinations of ETFs can only go to zero if the U.S. government defaults on its debt. Now, that's nothing to sneeze at. The U.S. government could default on its debt, but they're holding short-term treasury bonds, so it has to default on all of its debt. Now, even that's nothing to sneeze at, because in the short term, 2025 and 2026, there's a lot of debt that the U.S. government has to pay. That's why people in finance are saying the big print is coming. And that's also why people in finance are saying a black swan is coming, because they're not just going to print lots of money, cause lots of inflation, and tell people, hey guys, the Fed just needed to do this. They're going to need a scapegoat. They're going to need a reason. Let's just get really quick. The expense ratio here, nothing to sneeze at. I don't hold leveraged expense or other acquired expenses against funds, this 0.99% expense ratio is exactly the same as yield max. On the outside looking in, I'm very glad to see Yield Max has a competitor, because this is going to really keep Yield Max from raising the expense ratio. We look at FIVY, Yield Max actually has a fund that is lowering the expense ratio to 0.88, but this expense ratio is nothing to sneeze at. The idea is that just very quickly, the premium income is going to make it worth it. This is not something that I could do in a brokerage account. I'm not going to go open up a brokerage account and sell cash secured puts on TSLR. A few reasons is because they're using flex options. In some cases, I don't have access to flex options. Okay, but this institution does. So we're going to read some of this. TSYY is an actively managed ETF seeking current income while maintaining the opportunity for an indirect exposure to the share price of one or more ETFs whose shares trade on a U.S. regulated exchange, and that seeks daily leverage investment results 200%, 2 times the daily change of the underlying stock. And that underlying stock is going to be Tesla. So let's look real quick at this option strategy right here. I wanted to read these examples. Example 1, okay, let's see if we can get this a little bigger. Example 1, assume for simplicity that the underlying Tesla ETF shares are for selling an in-the-money put contract with 1 month to maturity. Assume for simplicity the underlying Tesla ETF shares are trading at $100 at the time the fund sells an in-the-money put option contract with a strike price of $105 and a 1 month maturity. The fund receives $550 in premium for selling the put option contract. If the underlying Tesla ETF share price increases to 105 before expiration, the fund will benefit from the increase in the underlying Tesla ETF share price up to 105. Remember, that's a leveraged ETF, so this is really opening up a lot of avenues right now. Through 105, the fund is going to benefit, and it's also going to receive the premium, which was earned through the sale of the put option. However, if the underlying Tesla ETF share price increase exceeds 105, that's the cap. Okay, the fund would not participate in any additional upside. Further, if the underlying Tesla ETF share price drops below 99.50 before expiration, that is the strike price 105 reduced by the premium received, which was $550, the fund would lose money. So this is a really cool way, just taking advantage of that inherent implied volatility, that it's better to sell options, all else being equal, than it is to buy options. Just like it's better to have a little bit of insurance and be the company that sells insurance. Progressive is always winning. Allstate is always winning. Okay, even during Mardi Gras, even when they're insuring young people, Progressive is always winning the car insurance math because they're pricing in that volatility. Sorry, there was a drunk driver one time when I was at Mardi Gras. So I always think Mardi Gras is going to be a time where the insurance companies raise premiums, if that makes sense. Anyway, example 2, selling out of the money put contracts with a 1 week maturity. So this one's out of the money. Assume for simplicity that the underlying Tesla ETF shares are trading at $100 at the time the fund sells an out of the money put option contract with a strike price of $95 and a 1 week maturity. The fund receives 50 cents in premium for selling the put option contract, even if the underlying Tesla ETF share price rises above $100 before expiration. The fund would not benefit from the increase in the underlying Tesla ETF share price. Instead, the fund's gain would be limited to the value of the premium received. But what's the cool part? They're selling these out of the money options that are more likely to expire worthless. The kind of loser options to buy, if that makes sense. Instead, the fund's gain would be limited to the value of the premium received. Further, if the underlying Tesla ETF share price drops below 94.50 before expiration, That is the strike price of 95 reduced by the premium received 50 cents. The fund would lose money. So those are the two types of put options they're going to try to sell. About 5% in the money and 5% out of the money. Very similar to IWMW and WDTE. I'm looking for Tesla to take another leg higher. So we've gotten into a lot in this video. We talked about a few setups. We talked about a few ways to collect option premium. And what we mostly talked about that was most important to me, thank you guys so much for being amazing followers and amazing subscribers.